And the one area for conflict is the use of the joint option to tax, where a supply would normally be exempt, prima facie exempt, property more than 5 years old, whatever. And if there are going to be VAT costs under the capital goods scheme for the vendor arising from such a VAT exempt sale, then the vendor will, as a matter of course, put the joint option to tax into the contract before it gets to the purchaser. The joint option to tax is a positive for the vendor. It avoids VAT costs, or it can actually produce VAT recovery. If VAT previously wasn't recoverable on acquisition development of a property and it's now been put to an exempt use within its adjustment period, you can actually get an uplift of VAT. So either which way, I mean, I've seen some cases where the vendor looks to put it in for no other reason than to recover VAT on his legal fees on selling. And that, to my mind, is not good enough reason for taking a property into a VAT net for another 20 years. From a purchaser's point of view, a lot of people will give it a quick knock and say, look, my purchaser's engaged in a vatable business. He's entitled to recover the VAT. It doesn't matter. That is a very short and incorrect approach to take if you're advising a purchaser. What you need to remember if you're advising the purchasers, this is the creation of a new capital good by agreeing to the joint option. So the purchaser must maintain a capital goods record for the next 20 years or until he sells. The purchaser must monitor use of the property for the next 20 years until he sells. If he puts it to any VAT exempt use over the next 20 years, he's going to have VAT costs. If there's a future sale anytime in the next 20 years and absent significant development, the purchaser will have to persuade a purchaser from him to agree to a joint option. So in reality, the joint option gives a benefit to a vendor, creates a potential 20-year tail-out period for a purchaser. So just because the purchaser has immediate VAT recovery, that is not the end of the story. And you really need to appraise a purchaser that there are long-term consequences arising from this. Another approach could be depending on who carries the biggest stake in the transaction. Well, if I'm advising a purchaser and I'm digging you out of a hole, a VAT liability, I'm creating risk for myself as purchaser. Well, then why should I not get an incentive for doing that? If I'm a purchaser and I'm digging you out of a hole of, say, a £200,000 VAT cost under the capital goods scheme, well, why should we not share those spoils? After all, I'm agreeing to something to dig as purchaser, to dig you as vendor out of difficulty. So there can be a lot of things that play in the joint option, and it can be a conflicting clause if looked at correctly.